The Infosys team is now going to speak to Shereen in maybe a few seconds now. So let me hand it over to Shereen Bhan, who's there at the Infosys headquarters.
Well, thanks very much, guys. I do have the Infosys management here with us in our makeshift CNBC TV 18 studio. Vishal Sikka, Rajiv Bansal, Pravin Rao. Appreciate you joining us. First of all, congratulations on your first quarter and a good quarter. Great way to start, Vishal. So welcome to the QSQT era. That, you know, Qayamat se Qayamat tak, if you would like that, or quarter to quarter. So I hope it's been a grueling, intense initiation as far as you're concerned.
Yes, I had never heard that QSQT reference to quarters before, but yeah, it has been a fun and intense day.
Excellent. Let me start by asking you, because in your opening remarks, sketchy at this point in time, which is understandable given the fact that you've only been in office for about 70 days. But let me ask you the fundamental question when you talk about positioning Infosys as a next generation services company and not a previous generation services company. You've talked about AI, you've talked about innovation. You've also talked about continuing to focus on the bread and butter segment, because you will have to do that.
Yes.
What does this mean in terms of reorienting the very core of your business model? If you're talking about positioning yourself as a new generation services company with a key focus on not on cost and labor arbitrage, but on innovation, what will it mean in terms of redesigning your business model?
I think that it means a massive embrace of innovation, a massive embrace of new technologies, artificial intelligence, automation, a great focus on delivering business outcomes and value, on innovation, on process improvements. And I see that as something that can help us rethink and reinvent each one of our existing service lines without disrupting them. For example, BPO, the traditional BPO, clients are increasingly not interested in the way BPO used to be done yesterday. They're interested in achieving great business outcomes and process improvements and process innovation. We see an opportunity to bring tremendous voice technologies, language processing technologies, automation technologies to rethink all kinds of business processes, and we are starting to do that in some ways. So we rethink that infrastructure management can benefit tremendously from innovation. So the key is to take our existing services and bring a renewal in those with the power of technology, with the power of better efficiency, with the power of automation, as well as in operational excellence and so forth.
So let me now extrapolate your other statement, which you said that you want the company to become a bellwether once again. You do know that Infosys has not been a bellwether for the last several quarters now. When do you anticipate that all of this is actually going to start delivering in terms of results? When do you anticipate that this is going to start delivering in terms of you being able to catch up with your peers? Forget industry leading, but on par with industry rates. By when can we expect that? Is FY17 perhaps the earliest?
Well, I expect, I mean, Mr. Murthy started this journey about a year and a quarter ago, and that was a 3-year journey, so I expect that that is the timeline that we'll stick to. The nature of the business is such that there is an inherent latency in the adoption and the being able to see the results. Of course, you are seeing the early results already, so it is not that that we can only achieve a step jump 2 years later or something like that. So you will see a continuously an incremental achievement and contribution of these new areas, but a meaningful impact of this will only take more time, and I think a
moving out of a single digit dollar revenue growth, by when do we anticipate Infosys moving out of that?
I think that I am deeply convinced that a next generation services company, as I have talked about, is one that can grow 15 to 18% over time, 25 to 28% margin over the longer term. And I expect...
You're nowhere close to that.
Right now we are not, but I expect that over time, over a long term, that is a target that we should easily aspire to.
So double digits. I won't get to 20% or even 15 to 18%, but NASSCOM industry rates, by when do you anticipate you will be able to get to that?
I think that you should expect that we will be able to start achieving those kinds of results on the timeline that we had started on, which was 3 years from 1 year ago, so I would say 2 to 3 years out from now.
You know, you said that you will require till at least April to articulate what your plan as far as capital allocation is concerned. Are we given to understand then that even your strategy as far as M&A or inorganic growth is concerned, we will perhaps have to wait till April in order to hear more clarity on that?
I think that this is an area where obviously you want to be able to jump at opportunities that surface, but we are carefully looking at our opportunities and we are thinking about these new areas, and yes, so that would be a good time frame. But don't hold hold it against me if I ended up announcing something earlier than that.
Well, the street will be very happy if you actually did end up announcing something earlier. They're drawing parallels with what we're seeing happen as far as Cognizant is concerned, which has just announced a big deal. So they're hoping that we could perhaps see the same aggression from Infosys. So perhaps sooner than April, maybe something on the M&A front?
Well, you never say never. You know, you can never say never on these kinds of matters. But we are very seriously thinking about these, and not from the perspective of growing or acquiring a previous generation company, but from the purposes of acquiring new skills, new capabilities that help us accelerate our drive towards the next generation, towards innovation.
So would it be correct to assume then that the inorganic growth strategy that you will pursue will be to augment areas like artificial intelligence and so on and so forth?
Yes.
So that's what you're looking at this point in time?
Yeah, among other things.
The buyback debate, let's get that over once and for all. You know, it was taken to the board several times in the past as well. What is the situation now as far as the buyback is concerned? You've announced a one-for-one bonus today, but is the buyback debate over and done with at this point in time, at least till April or perhaps even beyond that?
I would hope so. I think we are a new management team. You can see the results that we have started to deliver on. We are committed to a strategy of growth. We have a very passionate, young, dynamic management team. We see opportunities in many different areas. We see opportunities to growth, for growth in every area. We would like time to be able to think about and rationally plan in detail what we are going to do. And I do see the opportunity to grow the company and to take advantage of many of the positions that we have in those areas. It will, however, take us time over the next couple of quarters to more precisely articulate what those are. So until then, it would be wrong to even expect something, a statement from us in that area. However, I do believe that we are a company that is focused on growth and on being able to leverage the cash to be able to invest and grow in new ways.
Will you continue with the Infosys philosophy of protecting margins as opposed to chasing growth? Because that is another area that analysts would like some clarity on. Are you going to sacrifice margins for growth? Is there going to be a change in that Infosys philosophy and ideology?
I would not put it as one at the expense of the other. We believe, Mr. Murthy always talked about consistent, profitable growth. I deeply believe that we need to do both. Achieve a great industry-leading growth as well as be profitable while doing so.
Let me ask you about the demand environment, and you said that you've been meeting with clients across the globe at this point in time to get a sense of what it's looking like. What are the indications that you're getting in terms of IT spending as far as 2015 are concerned? What are the early indications that you're getting? How robust is the demand environment looking today?
I think there are certain areas where there is a decrease in demand that we see, and Pravin can talk about this in more detail. The overall, if I could summarize that at a high level, I have met several hundred clients already, interacted with them over the last 70 days. My sense is that there is never a shortage for demand for innovation, for great value. And in some areas, like what I referred to as yesterday's services, in some areas we see a downward pressure, commoditizing, and the commoditization of services leads to a downward pressure. However, when you talk to clients about delivering value, even in the existing areas, and certainly in the new areas, there is a great opportunity to deliver great value.
But you know, in the existing areas, and let me just take that point forward, because if one were to look at you being able to get back into the double-digit kind of growth rates and play catch-up with your peers, for instance, if I were to look at the BPO segment, 9% growth for you versus 30% for TCS. In the infrastructure services side, 15% growth for you versus 27% for TCS. How soon do you anticipate being able to bridge that gap?
I think that we will not bridge the gap by following the practices of yesterday. We have, as you have pointed out, seen significant challenges in these areas in the past. I don't believe in helping, just becoming better in efficiency and continuing this downward spiral that the industry seems to be on, of lower and lower costs and faster and faster hiring and things of this nature. I think that's the wrong direction for the industry. I think a much better idea, a much better direction is one that is based on innovation, and one that is based on a massive embrace of automation and new technology. What would that also then mean in terms of pricing and being able to attract a premium as far as pricing is concerned, if you do indeed follow this differentiated strategy? I think that, yes, I think that we can achieve a much higher value, new kinds of business models, new ways of delivering value and then capturing that value with clients. New kinds of propositions where we can share in the value that is delivered to the clients and so forth, as well as in much higher productivity that we achieve with our employees by the use of technology.
Okay. Rajiv, let me ask you the question on margins because, 100% basis point growth as far as margins are concerned quarter over quarter. Have you been able to suck out everything that you could as far as utilization is concerned? Utilization rates are at the highest at 82%. Is there room to able to do more there? And you said that, you don't anticipate margins moving significantly higher than that 25% band that you've held out. But is there really room for further improvement there?
There's always room for improvement in everything that we do, and I'm sure, if you look around the company, there's a scope for improvement in many, many areas. Having said that, I think utilization at 82.3% is what I had set out about 5-6 quarters back that I would want the utilization to be 80-82%, and today we are there. So I think it gives us the confidence that if we set our eyes on something, we will achieve it.
So what is the next target that you're setting your eyes on?
There is room for more.
There's room for more. But I think having said that, I think we have challenges on the growth. As you've rightly pointed out, we have been underperforming the industry and the leading players in the industry. And first priority is to get back our growth, to accelerate our growth and sustain that growth. And for that, there have to be investments made into the business, and we are making investments. So what we are doing is, at one time, we are looking at the cost carefully. We are cutting out all the costs which are unnecessary, which are not required for the growth of business, and making investments back in the business.
You've made significant gains there as far as your cost optimization strategy is concerned, which was articulated or which was one of the pillars of Mr. Murthy's revival plan. Do you believe enough has been done on that front? Or do you think that you could perhaps see more advantages coming in from being able to squeeze costs further?
As I said, there's never enough on cost optimization. There's always opportunities for cost optimization. There's automation. There's productivity benefits. So there's many, many ways of looking at cost optimization. But I believe that we have to look at cost optimization on a continuous basis. At the same time, look at opportunities for investment in the business.
So, investment continues, cost optimization continues, but the impact of the kind of strategy that Vishal just articulated, the more differentiated, innovative strategy that you're gunning for, forget what happens as far as margins are concerned over the next 2 or 3 quarters. But when can we start seeing that impact margins going forward?
I think the impact of the margins will show up, as Vishal said, our aspirations continue to be industry-leading growth at industry-leading margins. And if that is the thing, the impact will show on the positive side on the margins. So, as you start executing on the strategy, I think you'll start seeing the numbers flow down on the margins too.
So 2 to 3 years, is that the time period that you're working with as well?
I think Vishal is there. I cannot work on a different timeline than Vishal.
So
we have to work on the same timeline.
Pravin, let me ask you this. In terms of attrition, you've actually seen attrition rates go up despite some of the measures that the company has announced now at about 20%. What can we anticipate in terms of attrition? And also the reskilling that is going to be required for you to be able to capture on these new areas of opportunity, the digitization piece and so on and so forth. What should we anticipate there? And I also want to ask you about, there's been a lot of rumors about CTO, CIO, Chief Innovation Officer, and so on and so forth. Are we likely to see more changes as far as the management structure is concerned?
See, on the attrition, on a LTM basis, it's 12.1%. 20.1%. But when you look at it on a month-on-month basis, attrition has actually come down. So it's trending down in the right direction. So we are very confident that in the next 2 quarters, we'll get it back to where we want to be.
Where would you want it to be in the next couple of quarters, exactly, specifically?
Historically, it has always been around 12 to 14%, and that is where we are comfortable with, and that is where we would like to see in the next couple of quarters. Looking at the trend and looking at all the things we are doing, in fact, from April onwards, we have already had about 12,000 plus promotions. We have done a lot of things to fix the hygiene issues. Now it is a softer factor in terms of engaging with employees better, and with Vishal and the new strategy and a lot of things that we are doing on the engagement front, I'm very confident that attrition should go down. It has started trending already when I look back from July through September, even though it's 20.1 on an LTM basis.
A quick take as far as your verticals are concerned, the different verticals are concerned, and also the kind of growth that you anticipate specifically in the US market, which continues to be on the uptrend, but of course other markets like Europe looking a bit muted at this point in time.
I think Europe, actually, on a sequential basis, we grew by about 4.4% or something. US was 3.1%. So this quarter, I think we have seen, except in India, I think we have seen good growth across all geographies. US, we are seeing, definitely from an optimism perspective, we are seeing more optimism. and it's more or less broad-based. And as I said earlier, on the retail and CPG, we are seeing some softness, and probably in the second half, we may see some softness in the telecom sector. Otherwise, we are pretty much...
And to your earlier question, Shereen, about the reskilling, this is an area that we are extremely focused on. We believe that this is at the heart of our company. It is at the heart of any company's transformation, and especially at Infosys, where we value learning and education so much. On my first night, I went to Mysore, to our incredible campus there. We are bringing in the ability to reskill to our education itself. So we are creating new classes.
I believe that's part of your 100-day plan for Infosys as well.
Yes, my own. I mean, I'm hoping to do a couple of classes myself that I can teach. Hopefully, I still have the chops to do that. But we are doing a massive embrace of AI. We are creating some artificial intelligence classes, embedded systems, adaptive systems, and so forth. We are doing classes on design thinking together with Stanford. We have already trained some of our trainers in these areas. We have taken some clients on these sessions. So we are also, this reskilling will be, we know that it is going to be at the heart of our renewal, and therefore we are investing heavily.
So are you looking at bringing in a CTO, Chief Innovation Officer, and so on and so forth? And what's the real story as far as how many former SAP colleagues you brought with you to Infosys? Because there are all kinds of numbers that are doing the rounds. We know of the few that have actually joined the organization, but I'm not sure about the exact number.
It's just a few. I think a handful of
so it's not
colleagues
15
no. It is. I mean, SAP is a distinguished partner. I have hundreds and perhaps thousands of friends there. We have and Infosys and SAP have a very deep partnership. So, and we are looking to really take this partnership to a whole different, to a great level. I recently met with Gerd in Berlin, and so I mean, I have I worked 12 years there. So there is no such thing. It's typical in the industry when when a senior executive leaves, there are lots of people you are close to and have a chemistry with, and so I have a handful of people have joined us. So one of those is Dr. Naveen Budhiraja, who used to be at SuccessFactors, a company that SAP had acquired, and he left SuccessFactors SAP some time ago. And when I joined Infosys, he asked me if he could come and join, and he is our chief architect. He's helping us with our platform strategy and so forth. So there are some people like this, and
so are you looking at adding more roles as far as the senior management is concerned?
I am very comfortable with our management team for now. I think that we had a great chemistry working in this quarter. This was my first quarter working together. I mean, as you can see here, Pravin and Rajiv and I are sitting here. We have a great dynamic young team, and of course, we make changes when necessary. We made the change in Pinnacle.
I'm already getting signaled because we're out of time. So two quick last questions. Let me start with you, Vishal. Quick question as far as the clients that you're talking to. The BP deal has been a big win as far as Infosys is concerned. Can we anticipate more such deal wins for you, the BP kind?
Absolutely. I think that we did 6 or 7 large deals, 7 large deals in this quarter to the tune of about $600 million TCV. 5 were in the US and in many different industries, so for sure you should look for that.
And Rajiv, a quick question as far as currency and the currency headwinds are concerned. What is going to be the strategy to deal with the currency volatility that you've clearly articulated?
I think on the cross currencies, you can't do much because the translation would show up on the top line, for all the companies. But on the rupee, I think we expect the rupee to be in a narrow band of 60 to 62 rupees, and our hedging strategy continues to be short term. I think it has worked very well for us in the past, and I'm sure it will work very well for us in the future too.
So our money control viewers are writing in my final question saying, are you likely to be a more aggressive Infosys Vishal Sikka?
A more aggressive Infosys Vishal Sikka? I don't know.
Are you, Vishal Sikka, are you going to lead a more aggressive Infosys, or is Infosys going to continue to be more conservative as has been the norm?
I don't know about aggressive, but a passionate Infosys, a very responsive Infosys, an agile Infosys, a dynamic Infosys that is hungry for growth and excellence, absolutely.
Vishal Sikka, Rajiv Bansal, Pravin Rao, thank you very much for joining us here exclusively on CNBC TV 18. We wish you, gentlemen, the very best of luck. And we are going to come back to you for more precise details on capital allocation, M&A. And, of course, we hope that you do get back to industry-leading growth rates as well. But thanks very much indeed for joining us here.